Welcome to Unit 11, Classical Support and Resistance. Okay, understanding and having the ability to identify levels of support and resistance is probably the second most important concept that you guys need to learn in this entire course. If you spend time researching and reading on the internet and trading books on the topic of support and resistance, you're going to get a ton of the same regurgitated over and over, the same idea, which is sort of what I have drawn here on the chart. But I get into a more significant level of detail of what support and resistance actually are and how they behave. But what I want you guys to just be aware of is the classic version of what you guys are going to run into. It's technically not wrong, it's just much more dumbed down. But what you don't really see is anyone that's concerned with how a level of support and resistance were gained, or how it was lost, or even why it formed, where it formed. The reason that this is important is because it relates to the formation of trend, and it's valuable to understand this, especially when you're trying to pick direction and where trading should occur and entering and exiting trades. Basically, I'm going to read to you the definition of support and resistance. They represent key junctures where the force of supply and demand meet. In the financial markets, prices are driven by excessive supply and demand. So supply would be the down movements, demand would be the up movements. Supply is synonymous with bearish, and where bears are selling, and demand is synonymous with bullish, or bulls are buying. So support is the level where price reaches demand and it's thought to be strong enough to prevent price from declining any further. By that definition, this would be support at the bottom, and then the inverse would be this is resistance at the top. That is your most common idea that you read about, that you learn about in trading, support and resistance. It's one of the most important things that you need to know. However, sadly, most people get it wrong. They only learn this, and there's so much more to this. This becomes zone type trading, where you start seeing people talk about zones, support and resistance zones. And there's nothing wrong with that. You can be profitable with that style of trading, but you guys get the picture. I just want you to understand there are zones when it comes to classic support and resistance. Now, I want to illustrate a little bit what a more accurate version of support and resistance would be with my definition. I have drawn a bunch of levels. There's so many spots. It's not just about the zones I want you guys to take away from this. So at the bottom here, I have a move down. So I'm just going to put an R or an S for support and resistance. A move up, move down, up, down, up, down. You know, you guys get the idea, right? I just want to have your eyes focus on the movement. And then I'm just going to put an S for support, an R for resistance, and so on. And you guys can see this is much more in depth than just your arranged style of trading. Although the concepts are similar, we've just taken it one step further. You guys get the idea. So it looks a lot different than just your range-based trading. You see how much detail you can get from approaching it this way. Now, drawing them is another matter. But basically what's happening, guys, with the classic model is where price stalls out at the top becomes a resistance level, and where it stalls out at the bottom becomes support. And you can see at the bottoms, price starts holding these levels, and then at the tops, price starts respecting it and at least getting relief from the rally or retracements, and so on and so on. And this happens over and over. It's just the idea that you should familiarize yourself with of where support and resistance occur, and that it's not just a trading range. So this is what real life would look like versus the classic view that I showed you in the beginning. Just to review again, support is a price level where there's significant demand for a stock to halt its downward move. So from left to right here, we have resistance and we move down. Price is supported at the bottom. We'll just put a box there so you know where I'm referencing. Price rallies higher and its resistance at the top. Resistance is the price level where there's a large enough supply that the stock or the product is not able to continue higher. So there's resistance. And then just this cycle just continues over and over and over and over, over and over. And you guys get the idea. I shouldn't have to continue drawing that. But you can study tons of information on support and resistance. This is what most people are going to tell you. In all of your courses, this is what they're going to teach you. It's the same regurgitated stuff. Even this is slightly regurgitated. But when we start breaking down in, say, volume 2 and 3, we're going to start breaking down how to analyze this from a level of gaining and losing levels of support within trend, as opposed to just drawing a level and calling it support and resistance. So with that being said, I want you to familiarize, just go and practice, take some time drawing support and resistance levels based on sort of what you've learned here and what's in the text version of the course as well. Spend some time familiarizing yourself. Start with higher time frames and then switch to lower time frames. Draw out your levels and start to get an idea of how price works at these levels, what happens when you approach resistance, how price starts getting repelled. Just as when you approach support, you sort of get these pivots or these points of influx, I guess, where price changes its direction, at least temporary, if not long term. So familiarize yourself with that, and then we'll move on.